Hey, what's up, my friend? Welcome back to this week's market analysis. It's so good to be here, right, on a week-to-week basis. To have you, right, spending time with me, depending, where you are in the world, on a Monday or Tuesday, right, to listen to what I have to share about the markets, right? So it's an honor, it's a privilege to have you on board. Trust me, I really appreciate your presence. So back to this week's market analysis, we will be, covering basically an overview of what's happening in the financial markets, right? The forex markets, the equity markets, and the bond markets. And I'm going to share with you, right, a few trading setups along the way that I'm watching, right? So I want to share them all this with you in today's video. I'll see you there. Okay, so just a quick one, right? So for those of you who are new to my work, new to what I do, right? So this is basically my website. If you are unaware of, it's tradingwithrainer.com. And if you're wondering, right, what is my trading style? What is my trading approach? How do I analyze the markets, right? Go down to my website, tradingwithrainer.com, and download these two trading guides. They are free, right? And for the first guide, the ultimate trend following guide, right, it will share with you, right, on how to actually write massive trends in the market by adopting a trend following approach. Okay, so this is the first guide. And the second guide, right, the ultimate guide to price action trading, it will teach you how to better time your entries and exits, right? How to understand the different stages of the market so you can actually, make better trading decisions. All right, so both trading guides, right, are free, and they both, share with you a very simple strategy that I use to trade the markets. So just download both guides, and I can assure you, you'll have, a very good, crystal clear idea to how I trade the markets. So the website again is tradingwithrainer.com. I'll leave the link below. You just click this blue button, right? Put in your email address, and I'll send the guide to your email address. And again, it's free, no credit card required or whatever. All right, so moving on, right? Back to this week's market analysis, right? I want to talk about, again, right, since this is the first week of the month, I'm going to cover basically, right, a few of the major currency pairs, the equity markets, the bond markets, and perhaps, right, and see, what else I can cover. But these are usually the key market sectors that I cover to give you a broad overview into what's going on. So first one is euro dollar. So if you look at the euro dollar chart, let's look at the weekly time frame, right? Having the big picture perspective, right? No doubt the trend is, still down, right? As you can see, a series of, basically, in a range, right? In a very long-term downtrend. Okay, so this is the weekly time frame. But if you go down to the daily time frame, this is where, it's very easy to get swayed by, multiple time frame analysis. Because if you go down to the daily or even the 4-hour, it looks like it's pretty much in an uptrend. So what do you do? So this is an issue many traders face, right? They click through multiple time frames. One time frame is up, one time frame is down, and then they ask themselves, what should I do? Right? They get confused. So for me, I like to keep things really simple, right? First and foremost, you have to define a time frame which is your time frame, right? Let me repeat that, right? You have to define your time frame. If you are a swing trader, then naturally you'll be, trading off the 4-hour, the daily time frame. If you are a day trader, then naturally you'll be, sticking off to the lower time frame like the 5 or 15 minutes time frame, right? So know your time frame. That is very important, right? So for me personally, I'm a swing and position trader. So I like to get my bias off the daily time frame, right? So this is the daily time frame. And how I get my bias is very simple. If price is above this 200 MA, I look too long. If price is below it, then I look too short. This is just a very simple filter that I use to know which side of the market I want to be trading on. So since right now euro dollar pair has been trading above the 200 MA, if you draw this area of resistance, it has broke above it. So my bias is to stay long on euro dollar, right? So there are a couple of ways, there are a couple of things I'm seeing right now. Right, so right now what you have is this potentially huge move upward, and this could be a potential pullback, right? Maybe a potential flag pattern before the move continue higher, right? So one way to go about trading this potential setup is to have a buy stop order above this high. That's one. Alternatively, right, for traders who wants to, trade the pullback, you can go down to a lower time frame like the 4-hour time frame, and this I would say is the area you want to be looking at. the area of support where price could potentially come back in, right, and get a nice bounce up higher, right? So these are the two things that I'm looking at right now on euro dollar. Pound dollar, right? So pound dollar and euro dollar, they seems to be, correlated, because after all, they are trading against the US dollar. So pound dollar basically has a very similar setup to the euro dollar, with this huge move higher. Then we had this potential, rather somewhat of a bullish flag pattern, and then price traded higher. In fact, I covered this last week, the pound dollar and the pound New Zealand, right? If you want to learn more, just go and look at last week's video. I covered that pretty in depth. Okay, then let's look at dollar Canadian. Dollar Canadian as well, looking bullish. Price has broke above this resistance, right? Tested once, twice, and the third time it broke above it. Where is price relative to the 200 MA? You just look at it, it's above it, right? So you want to be looking for long setups, right? So a few ways to do it, right? You can look for a pullback towards this previous resistance turn support in anticipation of higher prices, or perhaps possibly, right, it may form somewhat of a bullish continuation pattern like this before the price continue breaking above the highs and trading higher. All right, so another pair I look at is Euro New Zealand, right? This is an interesting pair, because in terms of relative strength, I believe the Euro New Zealand and the Pound New Zealand, they are one of the stronger markets in recent times. Because if you just look at the daily or the weekly time frame, right, they have a very strong move, right, over the last 1 week. So if you look at this, right, there are a few ways, traders will interpret this. Number one, right, the way I do it, price is above the 200 MA, right? So I'm looking to long. And then there will be another group of traders who would say, hey, Rainer, price is actually, in this area of resistance. I'm looking to short. So the question is, who is right and who is wrong? Well, the answer is there's no right or wrong. It really depends on, what is your trading approach. As I've mentioned, right, I like to trade with the trend, right? And, getting my bias based on the 200 MA. Some traders may just trade off support resistance, right? And they'll be looking to short at this area of resistance. I can't say, no, they are wrong or I'm right, right? It really depends on, what is your trading approach. Naturally, sometimes they will be right, sometimes I'll be wrong. And sometimes I will be right, and sometimes they will be wrong. The only way that, you'll stay ahead in this game is, to have proper risk management where, you cut off those trades that go against you. So, meanwhile, right, as I've said, right, I'm looking to long, right, and what I'm seeing over here is that on the 4-hour time frame, price is at this area of resistance over here. In fact, if you go down to the 1 hour, right, you can see it's actually in this area of resistance, right? So depending which time frame you want to use, whether you want to use the 1 hour or whether you want to use the 4 hour, the price action structure is can be seen. Alright, I prefer to stick to the 4 hour, right? Because this is where, I will place my stops based on the 4 hour, which is usually larger than the 1 hour, because the time frame, 4 hour time frame will compress 4 1 hour candles into one candlestick on the 4 hour time frame. So for me, I would choose to trade off the 4 hour time frame. So you can see that this is the area of resistance. If price, were to close above, right, you basically have what I call a false breakout, where traders who went short on the break of these lows are basically now trapped. Correct? Because if you are short and price, close above support, right, you're now in the red, right? Depending, where you put your stops. I'm guessing, traders who are short will put it somewhere here, here, and the most conservative one above these highs. So as price were to trade higher, right, I believe this cluster of stops will get triggered, right, and fuel further price advance, right? So this is Euro New Zealand, right? I'm bullish on this. And let's have a look at, the equity markets, right? So that is for the FX. So equity markets, right? One word, bullish, right? There's no two ways about it. Put in your 200 MA if you want to. Price is above it, and you should be looking to stay long, right? So even if, let's say, you don't have a long setup, right? At least, right, you wouldn't try or attempt to short this market, right? Just follow the 200 MA and you will have prevented a lot of damage. Just look at this, right? Since price is clearly above the 200 MA, you wouldn't even think of shorting, right? So this means price retest this highs, this highs, this highs, this highs. You wouldn't think of shorting because the market is above the 200 MA. Right? So if you're trying to constantly short this S&P, right, thinking it can't go higher, right, think again. Right? Why do you want to fight the trend? Why do you want to walk up and hill with a 20 kilo rucksack and with a broken limb? When you can, slide down the hill eating a buffet with pizza, a can of Coke, and just glide down the hill? Why do you want to make life difficult, right? So do you want to slide down the hill or do you want to climb up the hill? Ask yourself that question, right? And once you make your decision, right, all you can do is just use the 200 MA to help you make, or rather filter your trading decisions, right? So S&P, I am bullish. Where you want to get long, right? Couple of ways to do this, right? If price were to retest this area of support, this is quite a obvious level that would interest buying pressure. Alternatively, if price were to form a build up at the highs, right, I don't see why you can't long the break of the highs, right? Against traders who think that price can't go any higher, I'm going short here, and when price break the highs, you're basically against them, trading against their position, and yeah, you would have a upper hand if you ask me. Nasdaq, similar story, right? I wouldn't even recommend shorting this, right? Just stay long, wait for the price to come to your level or to your setup, and stay long on this Nasdaq, right? This is as straightforward as it can get. And the last market I want to talk about is the 5-year Treasury bond, right? Because I believe there is a potential big move that could occur, so I want to share this. I might have shared this previously, but again, worth sharing, right? So as of right now, price, again, let's look at the 200 MA, right? Probably sick of this, of me saying many times, but since price is below it, right, I'll be looking to short. But I don't have a short setup at this point in time. In fact, I'm actually leaning more towards the upside, right? Because price has actually, broken above this resistance, and right now it's retesting this previous resistance, acting as support. But I'm not going to go long right now because, why? Price is below the 200 MA. I'm not saying you can't long, right? But this is just my own personal rules of trend following. I choose to, follow the 200 MA, right, for my trend following account, right? For swing trading, it's pretty much a different story altogether. But, let's stick to trend following for now. So you can see that, I have a long bias, but price is below the 200 MA. Okay, so what I envision or could potentially happen is for price to retest back this highs, consolidate, and then break out, right? Then I'll be inclined to long the break of this highs, and by then price would have already been above the 200 MA. Why am I looking to long the breakout? Because if you look at the weekly time frame, right, if you zoom out a little, from the looks of things, right, basically price broke below this area of support, then it traded lower, retest previous support, turn resistance, came down lower, and then it went back up once again, and then price closed above support. So needless to say, right, trading is all about probabilities. All right, one of two things can happen. Number one, this is as low as you're gonna get, right, for a long setup, and price trades higher from here. Okay. Number two, this is the worst place to go long because price comes into this level and then starts trading lower, right? Because honestly, these are the two possible scenarios, right? Either it's going to go up higher or lower, or number three, it does not move anywhere. You go into a range market, etc. Right? So there's no way to tell, right, whether it's going to be scenario 1 or 2. Right? I could be wrong, right? I go long in the worst possible price as this market reverse at this previous support and resistance. Or it could be the right move as the market rally above this level, right? And this is actually pretty much a false breakdown. Again, I have no idea, which is which. So this is why, again, it brings down to your risk management. All right? You can look like the greatest hero on this trade or the greatest fool. You have no idea which is going to be. Right? Better have your risk management in place and protect your downside. Okay, this is important. So with that said, right, I've basically come to the end of this week's market analysis. Just a quick overview. Okay, not really quick. It's about 13 minutes now into this video, 14 minutes, right? To know what is, roughly going on in the global financial markets. So we talk about the euro dollar, pound dollar, and the dollar Canadian, right? I'm bullish on all these three pairs, including the euro New Zealand, which I shared with you as well. Then we talk about the ES and the Nasdaq, right? The ES is basically the S&P 500. Nasdaq is, I'm sure you know what it is, right? Basically the technology stocks, right? Bullish as well. And then we talk about the bond, the 5-year bond markets, right? If you look at the 5-year, the 10-year, the 30-year, they are pretty much showing the same thing as well. So I guess this week's video is pretty darn bullish, right? Everything is bullish across the board. I mean, regarding what I've covered so far. Okay, so yep, right, that's all I have for you in this week's market analysis. If you've enjoyed it, right, please hit the subscribe button below and the like button. So this is something that is a feedback to me that I know you're enjoying this video, and I would really appreciate it, right? So thank you very much. And with that, I wish you good luck and good trading. I'll talk to you soon.